I guess so, McGraw. You know, got some big hitters again. Earnings coming out. I guess so, McGraw. You know, charts are coming, Cliff. All right. So markets have been dead, right? Motionless, chop, frog in a blender, call it whatever you want. Kind of like watch the grass grow. And it's what our expectation was the last couple of days. So it's kind of frustrating that, markets aren't moving, but, it was part of the expectation bias for the day. So that happened, and it doesn't seem like today would be the day that things would get moving, since we got some heavy hitters coming out after the close with more earnings. Um, Anything can happen, of course, so we'll see how it goes. As far as SPX options, assuming that things stay as they are, which we can't do because there's risk involved, but to think that they're going to get significantly above 4,200 doesn't seem to be the case. Why should it? I mean, unless somebody knows something, earnings coming out, blah, 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 whatever. Uh, there's premium above. So the idea is get as far away as where you think prices won't get beyond. And so 4220 right now is 60 by 75. And down below, while there's a void, and if something ugly started to happen, it could easily get down there, but I'm going to say below 4150. And 150. $41, 35, 30. I mean, you're going to have to go wide, which I don't believe makes it. Well, it matters. If something bad happens, of course, it goes against you. But, I always look at these things as being they're never going to get there. And we know there's that possibility. So there isn't a huge amount of premium, but I want to get as far away as possible since there is, a void. So 4150 is pretty darn far away. And so going down here to support even 35, you're not going to get a lot of money, but you know what? If it fell down there, and of course, as always, waiting to see some market direction. If it does start to go, the premiums will increase. But the idea is wherever you decide to do it, is that you've got a significant support level. And in theory, unless something terrible happened, like news-wise, some news, whatever, it's not going down through there today in front of those earnings coming out. And even if it was to drop quickly down into that area, any S&P trader that's watching this fall sharply or relatively quickly over a short amount of time, if they're short, they're going to buy to cover, and anyone else is going to look to buy down there. Once whatever their method is. For us, it's a price pattern, of course. But any fast move down there would be an opportunity to be a buyer for a bounce. It's all about how it gets down there. Meaning, can it go chop down there slowly, go sideways, then drop again, whatever it is, or just, fall off the 10-story building going down there and then bounce. So there's some premium down there, which is attractive because it's so far away and near support, and it's going up above, up here. Why should it go up there today? Anyway, reasons for why markets happen aren't always clear, but we see that we've just got this running in place, going nowhere type of market. All right. What are the markets doing this morning? What's saying 135, 110 is 35 cents. Can wait for pullback. Yes. 31.40, 31.15, 50 cents. Yeah. Excuse me. All right. Futures going nowhere. 3 days hanging up here. So is it a launching pad or is it a roof? I guess we'll find out by the end of the week. It's in an uptrend. One of the things I spoke about on Monday was that wide whippy ranges historically are not what large moves occur from. Things calm down and the ranges get tight. Lo and behold, the ranges couldn't get any more tighter. But we don't have a move in either direction yet. Maybe tonight after the close, maybe, right? The more prices are indecisive, the more indecisive we get because there's no direction other than to say uptrend. This is sideways, but we've got two major uptrends on the daily and weekly time frame. The weekly is a little bit extended. The consolidation has been correcting sideways, which is bullish. That being said, as it goes sideways, while we assume the trend will continue because multiple timeframes up, a break below these lows opens up the door to a short-term, decent size pullback. Right? So as this goes sideways here, and should it create a short-term top, while I've got this level of support marked off, my expectation would just be a short-term stopping point on the way down to probably the 50 MA and the 4,000 level, give or take. We'll see how it turns out. YM, same story, just different variations of just going nowhere. A little sell setup here between the moving averages popping up, but this is typical of what's been going on in this market. Saw it yesterday here. This was at support, but when we talk about how prices get to support, that's a useful piece of information for our analysis as to what should happen after. So wide range bars breaking down through multiple pivot lows historically result in a continued move down and many times sideways chop and then the next leg. Well, not in this market. Breakdowns, because it's so indecisive and doesn't, what happens on a very short-term basis looks extremely meaningful because it is. So, big moves like that, breaking down through support, typically result in lower prices, but that hasn't been happening. We've been seeing a lot of breaks of support, an immediate stabilization, and a move back up. In this case, this was a bit more normal because it had a retest of a pivot and then went up versus others that just break down and then they just move back up again. So sideways trading ranges like this that are directionless create uncertainty and say it is what it is until it changes. And Qs has M-top type of pattern developing here. No confirmation yet, but it's a little clearer. Now, this is still sideways at this pivot high. And this is in an uptrend and just slightly made a higher high and it's stalled. So, this is how we view slowing momentum. The indicator aficionados would call that a bearish divergence with their indicator making a lower high. We eliminate indicators and just look at the price action, which is obviously clear that momentum slowed down after making a slight higher high because it only peekabooed above the high and then it stalled. It doesn't mean it'll go down, but the momentum stalled versus over here, it took out the highs and it rallied before any kind of a meaningful stall and pullback. This hasn't pulled back, but it's obviously stalled. So, so far sideways, wait and see. Russell, more sideways price action. It's another one of those breakdowns and immediately right back up again. And look at how this broke down through all of these pivots. Right now, this is a 60-minute chart. So intraday, more meaningful, higher time frame, breakout failure, lower high, breakdown, close below the pivots, immediately back up again. It's treacherous. Now, yeah, this has shown strength, but, we don't have confirmation on the daily chart by a closed day. At the end of the day, this could be a red bar where the depth of retracement here is a positive within this sideways range and this breakdown failure. So there's just lots of conflicting patterns and information across multiple timeframes in this market. And, the normal occurrences of a pattern, this happens, then that, it just hasn't been playing out the way it historically has done. And that plays havoc with some trading strategies, of course, on a short-term basis. On a long-term basis or intermediate-term basis, breakdown failures, and this resulted in a move up to resistance. So that's perfectly normal. But then things kind of dying out and, bottoming tails here, waiting to see if the Russell can play catch up. Another one on hold. Bonds pulling down here a little bit. And so this is the 30-year. And months ago, we talked about the fact that this was very likely to come down here and that interest rates were going to go up, and they did. And so this hit this level of support and began to stabilize. Now, the retracement off of that was minuscule, whereas even after a nasty drop, it maybe could have got up to the 20. There's nothing to the left here, so the door is open, but it's stalling and starting to roll. Now, since this low is so close by, this particular pattern is a risky one for shorts because this pivot is so close. Now, It doesn't mean it can't break the low. And actually, I like this pattern for longs, but if it breaks the low and then you get a reversal back up again. But in the short term, should that happen, it's going to unnerve the market. So, and one of the things that we've talked about here over the last several months was, interest rates going up, bond prices going down, this 2% level being tested, possibly exceeded. And so this is something that could be lining up the, sell in May and go away, because we know that when interest rates went up as they did, it was the speed at which the interest rates went up. These interest rates going up, actually what should happen with this, like a fake recession, I'll just call it that, with this pandemic and mass, which whole nother conversation. But look, if this should push up and get above this high and immediately stall, which could be a type of M top where interest rates then reach a high point and then start to come in again, all of that could create that May swan dive. So keep an eye on TNX or TBT to be aware of if interest rates do begin to pick up some steam, because looking at TBT, this level of retracement into this area right here is forming a buy setup. Right? So it hasn't triggered yet. That green bar isn't done, but this pullback after a strong move and reversal, TBT starts rising and the 10-year starts rising. And if it does it with any momentum, it's going to unnerve the equity markets. I mean, we assume that because it did before. And if this should push up and, the 10-year push up, up toward 2% or slightly get above it for just a little extra, stick in the eye for the equity markets before it stalls, I think this is definitely a place that you want to at least set an alert to see if it gets up to this high and be aware of that, especially if you have a lot of longs on. All right. Gold. Pulling back, which should form a buy setup here. We got a sell setup on the weekly. I know the monthly is still in an uptrend. So you got a lot of opposing information, but the turn, right? This is a very complicated type of a turn because all these time frames are out of sync. But this little bottom here at support, rallying up, a little sell set, terrible type of sell setup since it's opposing or this retest pattern here. So this beginning to make a turn should be a good buy setup for gold. Not ready yet, but one of the things to look at, this is breaking down under these bottoming tail bars. There's lots of support right here for this to come down and start to make a turn. Silver holding up a little better, but it's a messy pattern, So I think gold is gonna be the way to go. But look, you could do them both. And there's an article which I haven't read yet on a Zero Hedge website. They got a lot of good stuff. They got some stuff I think it's over the top, but there's an article there about something to the effect of the silver short squeeze, what happened, or on hold. So there's probably something interesting there if you want to go take a read. I haven't done it yet, but I intend to. Crude oil, right? We saw crude oil pick up some momentum yesterday, and with that, some interest, of course, in energy stocks and ETFs. So this moved up quite nicely at the end of the day off of support. Now it has broken down, but the weekly chart, right? And this is one of the ways that we use multiple time frames. In that you've got a downward trending move here. Now, it hasn't violated what we call major support because there's no pivot because it was so strong on the way up. There's no pivot below here. However, as this is pulling back, making lower highs and lower lows, the expectation is this type of a pattern at some point, again, historical patterns, will find its footing well above the significant support point here that would violate the trend. And that's what's beginning to happen as this weekly chart is beginning to make the turn. We'll see where this ends up, but the break below the lows last week, and now the stabilization and bottoming tail bar. Yes, it's got resistance here, so somewhat similar to what we talked about with gold over the past weeks, but this is something that could actually make a nice turn and start moving back up again, especially with oil showing some strength here. Okay, and one of the things keep an eye on here, everything keep an eye on, so you don't have to keep an eye, put an alert. Be aware if the dollar keeps falling here, there's these intermarket relationships. So I don't want to get into it right now. Anyway, set an alert down here on your UP, which is the ETF for the dollar. Know whether the dollar is starting to make a more significant move. And, you can see how it's been trending down. It's kind of stabilized, but it's tied to gold and oil and a few other things that might happen of significance. And the transports, new all-time highs in a market that can't get out of its own way. If anything, this market is interesting, but also frustrating. So all yours, Dan.
Yeah, that we should actually show that at MT Live today. We'll be talking about relative strength, weakness. What the heck does that mean? Relative to what? So that, as always, there's so many examples we can give. We could spend hours on those things, but all right. Jose, all right. Our opens seem fine, a little bit of jiggling around, but nothing problems that I see. If you have any questions, ask me, because I want to get right. There was a ton of, we're in the middle of, a third, I mentioned a third of S&P 500 is going to be doing earnings this week. Jose and Thomas have a couple here, but yeah, then I got to get into some of these gappers. Terra, short. It's a continuation pattern. It's far from the 20, but it sure looks lower all time frames. Dell, day trade under these lows. Sure, it's in an uptrend though. So just kind of day trade. Thomas, Lulu, PM. Lulu, I see no pattern. It's well, it's a bullish pattern. It's a bullish daily, weekly. It's consolidating, but you can buy the breakout. Sure. Yeah, Lulu's been strong. Papa Mike, same. Yeah, I'll put Papa Mike on my list. That's very bullish. Time consolidation. Yeah, I like that one. Moss gapping up to 65. Gapping right up to yesterday's high, maybe 30-minute high. Starbucks had earnings, gapping down 113. It's gapping right to support though, right there. So call spread over last week's high would be better. Carlos, don't even get me started now. I got 4 minutes to go. We'll get to that later and at noon. ENPH 155. It's gapping right to support. It's kind of range bound, maybe even a condor. I don't know. TENB 4350. 30-minute high maybe. It's a nice bottoming pattern. Gapping over a red bar. TENB. Juniper. It's gapping to resistance, but keep an eye on it. Remember when we were scanning yesterday? I like SKT. I like. Why there's I got so many stocks we scanned for an hour yesterday. I sent through Telegram a big list. I sent again this morning a list just based on gaps at the time. So we just need kind of the broader market bias to, to see if, as Greg said, do we have a launching pad or a roof? But there's a ton of bullish patterns out there. Tim, CGNX. Yeah, definitely. Absolutely. Breakout of a bottoming pattern. Absolutely. After greater than 100% retracement, trading range, 20 MA curling, price void. I love it. Now you can buy yesterday's high. I'm going to put that in a window. CG. Just go through your checklist, make sure there's no earnings, make sure it's not a bio. MDLZ. And gapping up to 60, 50, 30-minute high. It's a bullish gap over this. It's a shock pattern. 30-minute high on Mondelez is fine. Norbert. PayPal Square. PayPal, nice gapping down 268. I don't see any pattern there. Square, we're actually in a put spread. Gapping down a little bit. We've covered half. Actually, this is gapping under our stop. So let's move stop 30-minute low on Square. Let me go ahead and send that out right now. Stop 30-minute low. Actually, so this is what I posted in text this morning. If any of you are interested in writing those down. AXP, it is a 1, 2, 3, yeah, but it's a 1, 2, 3, not from consolidation, but it's a 1, 2, 3 from a downside shakeout. So yeah, AXP is on my list. XLF looks good. Yeah, XLF looks great. Where was I? FSIV. That's ugly. That's a nasty engulfing bar. Wow, gapping down the bottom. Gapping way down here. That's a nasty shock pattern. I don't know what to do with it now though. Texan getting whacked. That's a ugly, ugly gap, but it's too extended. I don't know what to do with it. Maxim, if it holds right in this level and I can take out a prior bar's high, it looks fine. Olin, 30-minute high. They are FHN. We're in FH. We're already in it. We're in it. Looks great. We're in trail mode. I got a voltage alarm going off. We were in trail mode on this. BG. BG. All right, it gapped under the stop. Let's just bail break even on a bounce on VG. When they don't act right, I can get out break even. That's a gift. Let's get it out of the inventory and don't even worry about it. On to the next bus. Market just slopping around here, but Spider's okay. Diamonds, IWM, Qs all weak, gapping under the 15-minute closing base. So we got a slight bearish bias here ahead of FOMC, but I'm not going to be aggressive at all. AMAT. All right, Matex, nothing. AMAT, we were in trail mode, so that's stopping, that's trail stopping out. And again, we have long stock and put spread. Now look at this splunk middle chart here from yesterday. I don't know why I was hesitant, but that's I think I don't know. It looked like a big stop, but that surely that's not a bad short right here, folks. Splunk, little continuation breakdown from a gap breakdown. Bearish 15-minute chart, upside shakeout. You could short 5-minute lows, stop over this upside shakeout pivot. Possible, Carlos. Yeah. Well, I would rather Carlos had take out yesterday's high, and then that's my long, because then it'll be red bar ignored. But yeah, it definitely is. It definitely is on my watch list for directional.